however, the capital allowance claims, we are talking of the notice of assessment. And what are those informations that are supposed to be appear on the notice of informations? I think that is where we were before the breaking of the network. Anyhow, now the loss relief, if any, that is the taxable profit, then the tax payable. What are the types of assessment? When we are talking of tax of assessment, we have the original assessment, we have the revised or amended assessment, then we have additional assessment. Now, when we are talking of the original assessment, this is just the first assessment that is raised on the taxpayer in a particular year of assessment. An original assessment may be subject of an object or an appeal produced. Then we have the revised or amended assessment. So this is just a type of assessment that is raised to replace an original assessment. And the replacement usually comes from either a notice of objections or appeal that is successful. Then we have additional assessment. The additional assessment will usually arise from the back duties assessment. And the additional assessment is to cover a shortfall in the tax that was previously paid. What are the forms of assessment? When we are talking of the first form of assessment, we have provisional assessment. We have the self-assessment. Talking of the provisional assessment is a traditional assessment because it is just a way by which we estimate the tax that are payable based on the tax paid by the taxpayers in the previous year. And the provisional assessment is subject to the objections and appeal procedures. Then the B of it is BOJ. We call it best of judgment assessment. This will usually arise where the taxpayer has either not filed the returns or is not even registered for the tax purpose. So where this occurs, the inspector of the tax will simply use the best of his judgment to estimate the assessable profit, capital allowance, claimable, and the tax payable. So the BOJ is also subject to the objection and the appeal procedures. What are we talking about? Somebody that has not been paying tax all this while, that has probably avoided tax from all this while, from the inception of his business. So the tax authority can just stand up and go and estimate, use their own discretion. That is the best of judgment. By using their own discretion in estimating the capital allowance and the accessible profit. Like somebody that's under normal conditions supposed to pay 200,000 naira. The best of judgment can come up with the issue of the total amount of 500,000 naira. No, it's subject to a kind of appeal, of course. That is not the exact amount is meant to be paid. But the person, as a result of being furious about the amount, so he can now appeal. Then we have the self-assessment. This self-assessment was introduced in 1993. Yes, it required the taxpayer just to display some level of trust. That is, the taxpayer will believe that is exactly what I expected of, based on the returns or the profit end. So this is simply because the taxpayer is expected to complete a standard self-assessment form. So the typical self-assessment form should contain all the information expected to be found on a normal notice of assessment. But to encourage the taxpayer to file their returns by self-assessment, two advantages accrue to the taxpayers. One, the first is that the payment can be effected by installments because the tax can be paid by 6 equal installments over the 6-month period of time. And the another advantage is to that of a taxpayer is this: where all the installments are paid on due date, 1% bonus is deductible from the 6 installment. Now, the objections and appeal procedures. Okay, if the tax authority use BOJ, or the taxpayer has not been able to pay what expected of him based on the assessment, how can the person object such amount of money that has been put across to him, or a kind of appeal procedures? Now we have the like 6 of them, where a taxpayer receive a notice of assessment, and he either agree with it or he agreed with it or not, rather. So where he agree with the assessment, the position of the law is that the tax must be remitted within the statutory limit time of the 60 days from the date of receipt of the assessment. Then where he is now aggrieved, that is, he is not agree with the assessment, he is expected to raise a notice of objections. And this notice of objections must be valid for it to have any effect. And we have certain conditions for that value, for the notice of what they call objections or appeal to be valid. There are some conditions that attach to it. One, such a thing has to do what? It has to be in a written form, and it must be made within 30 days of the receipt of the notice of the assessment. Likewise, it must contain the ground objections. That is, when you are talking of these ground objections, the reasons why you should not pay up to that amount. That is, those are the conditions. Then, upon the receipt of the valid notice of objections, the relevant tax authority, will examine the ground of objections so as to determine their validity. Where the grounds are found to be valid, the tax computation will be reviewed, and the revised or the amended assessment rate payment will be based on the revised assessment, not the previous calculations. Then, where the number 4 is where the relevant tax authority believes that there is no merit in the notice of objections, the notice of refusals to amend will be sent to the taxpayer. That is, if a taxpayer, what you are saying here basically is this: if the taxpayer is trying to put up a kind of objections, and having submitted the objections, and they now find it they find it very clear, the tax authority now find it clear that he does not have a merit. So as a result of not having a merit, that means a notice of refusal to amend has to be sent to the taxpayer. And the taxpayer, if aggrieved by the notice of refusal to amend, should file a notice of appeal to the body of appeal commissioner within 30 days of the receipt of the notice of refusal to amend. However, where decisions at the High Court are not satisfactory to either parties, then the right of appeal to the Court of Appeal may be exercised within 30 days of the receipt of the judgment. So subsequent appeal lies to the Supreme Court of the Nigeria. Now, the body of appeal commissioner, okay, who are those people that constitute the appeal? This body, the body of appeal commissioners, they usually adjudicate between the taxpayers and the relevant tax authority. So they are just a mediator. They are in between the taxpayers and the tax authority in the event of a kind of dispute concerning the assessment. So that means that this body must be made up of an independent people who will be in a position of review this dispute passionately. Then consequently, one of the key requirements is that where an appeal is to be held concerned, a case in which an appeal commissioner has an interested either as a shareholder, directors, legal advisors, auditors, tax advisors, or even in whichever capacity he should inform the others appeal commissioner, he will usually be excused from such a meeting. Now, what are the qualifications of those appeal commissioner? Yes, he must have the following qualifications. He must be a legal practitioner. What does that mean? somebody that is known by the law, that can be a representative of either of the two. Then, of course, that has been called to bar. Then he must be a chartered accountant, because only legal ideas, only constitutional ideas and legal ideas will not be enough to settle the dispute between the taxpayer and the tax authority. So the experience of the tax knowledge has to be adopted or useful. Then, and at the same time, he must be a tax practitioner. What does that mean? He must be a tax practitioner. That is, he must be a chartered tax person or member. Must be a member of Chartered Institute of Taxation of Nigeria, CITM. Who is licensed? Yes, that is another issue. Who is licensed by the board to practice the tax, the filing of the returns? And at the same time, it must be a person experienced in what? In business. How will they be appointed? An appeal commissioner is appointed by either the Minister of Finance or a Commissioner of Finance in a gazette. So the Minister of Finance from the country, while that of the Commissioner for Finance as a gazette in the state government, at the state government level rather. So the minister is responsible for the appointment of the Federal Appeal Commissioner, while a state commissioner is responsible for the appointment of the state appeal commissioner, as I've said earlier. So the minister or the commissioners will now determine the remunerations or the allowances that is payable to an appeal commissioner. So tenure is 3 years, although an appeal commissioner may resign his appointment in written before the expiration of that 3 years. So, okay, when office appeal commissioner be declared vacant, when can the office of the appeal commissioner be declared vacant? So it can be declared vacant when the office of an appeal commissioner is declared vacant. It means that he is removed or resigned from the office before the end of his tenure. So the following are the reasons why office of the appeal commissioner will be declared vacant. Number one, where he has absented himself from 2 consecutive meetings. From 2 consecutive meetings without an approval from the chairman. So the chairman, either from the federal gazette or the state gazette, can declare that office vacant because he has missed or be absent from the meeting for consecutive 2 times. And where he is also confirmed to be of unsounded mind. Of course, if the person that has been chosen as an appeal commissioner found unsound mandate, that is, becomes a lunatic, out of sense, out of mind, because they believe whatever he's doing afterward will not be material. So that office can be declared vacant. And at the same time, where he has been committed for a criminal offenses or felony or offense related to the tax matters, that is falsifications of the profit of an organization, is an offense. So in that case, because when whoever we call a commissioner or a legal practitioner or a tax practitioner, they must always obey what the law says. The law that is guiding the payment of the tax has to be considered in all ramifications. So if he is now trying to support a particular agent, either taxpayer or the government authority in one way or the other, so it's a criminal offense rather. So which may subject that his office to be what? To be declared vacant. So that about that. Now we are in chapter 2 now. That is personal income tax. When you look at the decree of number 104 of personal income tax 1993, the decree deal with the imposition of tax on an individual, and it provides that payment of tax shall be made from each year of an assessment upon the income accruing derived from, bought into, or received in Nigeria. What are the sources of that income? An individual could derive income from various sources. such as profit from the trade, business, professions, vocations carried on by that individual person. Then, of course, another one is that of salary, wages, or fee, even allowances. Any other income coming to be earned as a result of unemployment, including all the benefit in kind, they are also taxable. Likewise, the rent received on the properties owned by that individual. Then number 4 is dividends, interest, or discount is also taxable. And at the same time, any gratuity received in excess of 100,000 naira is also what? Is also a source of income that is taxable. Pensions, charges, or annuity, other gains or profit that do not fall within any of the above categories are the sources of income. Now, withholding tax at source. When we are talking of withholding tax, income such as rent, dividend, and interest always suffer withholding tax at source. And this withholding tax, with event from 1985 tax year, was 15% of the gross amount paid or credited, whichever first occur. So the finance, that is the miscellaneous taxation provisions, Decree number 31 of 1989, subsection 5 and 6, however, said that tax deducted at the source from the dividends, interest, rent, and royalty shall be the final tax from 1988 year of assessment. Are we getting it now? So the effect of this on the tax computations is that all shall be added to the other income to arrive at the aggregate income. So the income that has suffered for that tax at the source will not be regarded as having been taxed with a low rate or band of, or even the rest income suffer tax at higher rate. Now, benefit in kind, what does that mean? Benefit in kind also enjoying a kind of enjoyed by an employee in the course of their employment are taxable on the receipt of the such an income as follows. Okay, when we are talking of this benefit in kind, if the employers owns the asset and the amount of the benefit in kind shall be 5% of that of the cost of the asset to the employer. Just take for example now, the employers provide furnishing for the employee. So, and it will be 5% of the value of the furnishing that has to be deducted from the salaries. Then, and at the same time, if the employers pay rent or hire of the asset, and the amount of the benefit in kind shall be the actual of the rent or the hire paid by the employers. And likewise, where the premises they were using for the business are provided by the employer and occupied by the employee. So the amount of the benefit in kind shall be the annual or the rate value less amount paid by the employees towards the properties. Are you getting it now? So the rent or the allowances in lieu or take in place paid to the employees is regarded as benefit in kind and is taxable provided. And it's taxable provided the amount that does not exceed 720 naira. So this amount was raised from 720 naira to 5,064 naira from 1988 tax year. So anything above this figure will be taxable. So with the effect from 1992 year of assessment, the limit of the rent allowance to be enjoyed by the employees are as follows. Number 1, we have the 28% of the annual basic salary or maximum of 10,000 naira per annum in the case for those in Lagos area or Federal Capital Territory. And at the same time, we have the 28% of annual basic salaries, 28% of annual basic salary up to the maximum of 6,000 naira per annum for those in the state capital. And at the same time, 28% of the annual basic salary up to the maximum of 4,000 naira per annum for those in the order of the country. So in each case, the excess is regarded as benefit in kind, and it is very much taxable. Are you getting it? So, and motor vehicle or transport allowance is another kind of benefit in kind. And it's also taxable, of course, because any amount below 600 is not taxable. So from 1988 year of assessment to 1991 tax year, the amount jumped to 1,740 from 600. You can see it. So increase of this new figure was made from 1982 year of assessment to 2,436 naira per annum. So any excess will be taxable as benefit in kind. What do you understand by earned income or unearned income? Yes, in computation of personal income tax, income is always categorized into earned and unearned. And for the purpose of these categorizations, it is simply because the personal allowance computation is based on earned income. Only although the life assurance relief computation is the combination of the earned and unearned income. Now, what is earned income? The earned income arises as a result of carrying on a trade, professions, or even vocations by virtue of one employment or past services. Example are business or professional income, salaries or pensions, commissions or bonus. They are the example of earned income. Unearned income now, and when we are talking of the unearned income, these are the income that are derived from one investment in shares or property outside the business. Example are the dividends, the rent, interest on the bank deposit account, among the other ones. Then what the reliefs against the statutory total income. When we are talking of the statutory total income, the give the statutory total income. Are we getting it now? So against this total income is allowed to be relieved or to be deducted before arriving at the taxations or the chargeable income. So now, what is personal allowances? Personal allowances. So when we are talking of personal allowances, there have been a series of changes in the computation of personal allowances. How are we calculating them? So the chargeable period are 1985 to 1986 tax year. That one said, if a earned income is 6,000 or below, there is a flat rate allowance of 1,200 per annum. Then where earned income is above 6,000, there shall be an additional allowance of 12.5, that is 12.5% of the excess income over the year, 6,000. Then 1,002 granted in the above. 2, 1897 to 1989 tax year, personal allowance is computed as 12.5% of earned income plus 1,000. Can you get that? Yes, 1990 and 1991 tax year, personal allowance computation is 50% of earned income plus 2,000. So from 1992 to 1997 tax year, new formula of personal allowance computation is 15% of earned income plus 3,000. So if you now look at 1999 to 1980 tax year, 5,000 naira plus 20% of earned. So we have married allowance, of course. Yes, if somebody has married, of course, it's only Nigerian authority, not Nigerian as a country where the law are not being used the way it's supposed to be. So a married person is entitled to an allowance of 300 naira provided that he was living with the wife in the preceding year, or he's maintained a wife and living separate. So any alimony not exceed 1,300 paid to a former spouse under an order of a court of competent jurisdictions in the case of individual whose marriage has been what? Has been dissolved. So it's allowed. So it should be noted that an individual couldn't claim both married allowance and alimony in the same year because it is either of the two. Either married allowance was increased to 500 from 1987 tax year, as from 1992 of year of assessment, the married allowance was abolished, while alimony not exceeding 4,300 is still maintained. Now, there is what we call children allowance. The taxpayer that has children or child in the preceding tax year is entitled to claim a child allowance of 250 naira on each unmarried child. Are you getting it? Up to the maximum of 4 children. That is somebody that has given to birth from the day one, the first 2 months, 3 months, that has not even attained to the puberty age of getting married. So he has the opportunity to be given the child allowance. And a claim can still be made if the child is over 16 years of age, provided that he is receiving full-time instruction in the recognized educational institutions. And it was under the article or indentures in the trade professions. That is, one can also claim child allowance on an adopted child. You know, when we talk of adopted child, that is the child that does not belong to you, but you are taking care of him or her. So the allowance moved to 400 naira per unmarried child. So there was an increase in the 500 from 1992 tax year to 1,000 in 1995 and 1,005 in 1996 and 1997 tax year. So invariably in 1998 tax years, it is 2,005 per annum per unmarried child, and still subject to the maximum of 4 children. Now, dependent relatives allowance, we call it DRA. Taxpayer that maintain a widow's mother or mother-in-law, a close relative who is incapacitated by old age or infirmity. They are regarded as dependent. They depend on such a person. Are you getting it? So then the life assurance prime in allowance, we call it LAP, LAP. So tax relief is given in respect of the premium paid on the life insurance policy, either of the taxpayer or his spouse, subject to the following restriction. So it should be the lowest of the actual amount of the premium paid during the period. Then 10% of the capital sum assured on the debt. Then 1/3 of 20% of the net statutory total income. Then premium payable in respect of life assurance policies, retirement contributions, and the widow's pensions. Pension scheme which must not be more than 2,000 naira in any 1 year. So now I want to quickly give you the assignment. I want to quickly give you the assignment, which is submittable to the following address: Adecas Management Consult, ADE KAZ MGT Consult 01, ADE Ade KAZ CAS MGT Consult 01 at gmail.com. DE KAZ ADE KAZ MGT Consult 01 at gmail.com. So discuss the adjusted profit procedures. discuss the adjusted profit procedures in the computation of the tax. Discuss the adjusted profit in the computation of the tax. Assignment number 2. Assignment number 2. Assignment number 2. Assignment number 2. List and explain allowable and disallowable expenditures that has to be considered when calculating personal income tax or company income tax. I said you should discuss, list and discuss, the allowable and disallowable expenses that has to be considered or not in the computation of personal income tax or an company income tax. So having given you that assignment, I think I've told you the assignment has to be submitted to Auditors Management Consult 01@gmail.com. Auditors Management Consult 01@gmail.com, which has to be submitted before next class. So that's on that. And as you all know, we will be taking into consideration the other aspect of the materials, that is management accounting, by next class. It's subject to the turnout of the response of your assignment anyway. So thank you for today and for giving me your time. So and thank you for listening.